Welcome back to day 5 of my Path to Profitability series. And this week we had a major breakthrough. We've finally found a strategy that I'm confident and that I know I'm going to use when it comes to passing my eval in 4 months. Before we hit the charts, let me go over my new strategy and show you guys how it works. Alright, so basically how my strategy works is it focuses on liquidity draws. So this can include session highs, session lows, 4-hour highs and lows, and 1-hour highs and lows. In my example right here, we have a 1-hour low in London session. Then we switch over to New York session here. As you can see, nothing really happens. And then we have a liquidity grab right here. Then after a liquidity grab, we can see that a fair value gap is formed right here. So, it's retraced and continues up higher. That is the strategy. So liquidity sweep, confirmation that orders were filled, fair value gap or equilibrium formed, and then a retrace, and then continuation of the trend. So that is pretty much it. And then we've got London low here, which gets swept here, but market has just, gold has just been going down and down and down and down and down. So, but yeah, pretty much that's it. Well, that's all the strategy is. Alrighty, so as you can see, we're on the charts, and this is the only trade I took today. So as you can see, we had a liquidity draw on the New York low from Tuesday. Price reached, grabbed all the liquidity, and then we can see a reversal. So we do know that orders were filled. Then we have a fair value gap, which I marked out. Price continued, tapped back into fair value gap, which is our continuation confluence, and continued. This is where I entered. I entered with a 1 to 4 risk reward. This is only because I set my stop loss to below this fair value gap, as I had assumption that it would come back and refill this fair value gap, and I wanted to make sure that my stop loss was set below. And I was correct. But we got lucky and price continued and ended up hitting my stop loss, which was set at this other area of liquidity right here, and we ended up winning the trade. It was pretty good. I think I did about 100 units, so I made around $1,200, but this was a good trade. I had a lot of set confluences with my trade. Everything, like my setup, was really good. I did almost get stopped out, but overall this was a good trade and I was very happy with the outcome. That was the only trade I took this week, and I'm really proud of myself for it, because I was getting into the habit of constantly revenge trading, over leveraging, and honestly just taking a trade just for the sake of it. However, last week I was able to only take one trade, and yeah, it was a little difficult, but I was able to stick to my setup. I was able to stick to my risk management, and I only took a trade when my setup happened on the charts. So, yes, I could have traded more. Yes, I could have made more money, but I didn't. I stuck to my strategy. I saw the setup happen and I went for it. And it worked out really well. If this week's taught me anything, is that I can change, because I used to be so impatient in the markets. I used to revenge trade, and I probably still occasionally will. But this past week, I've been so patient and I've followed my strategy so well, and my psychology has been so much better. And that's the biggest thing when it comes to trading, is your psychology and your risk management. So with that, I'm wrapping up day 5 of my Path to Profitability series. If you guys have any suggestions on what you want to see next, feel free to leave a suggestion down in the comment section below. Hope you guys enjoyed. Make sure to subscribe to follow along on my journey. With that being said, peace out.